Hey everybody, welcome to the channel. I'm Sheen, your host. This is Money Matters. In this channel we talk about money, finance, how to grow your money, how to invest your money, how to make money work hard for you. Check out my other videos. If you like what I'm doing, please give a thumbs up. Really helps out the channel, pushes the YouTube algorithm, spreads my video to other people. Please give a thumbs up, really helps out. Also, consider subscribing if you haven't yet already. All right, let's get started. Today we're going to talk about Tesla and why I predict they're going to hit at least 900 to possibly even breaking over 1,000 in the next couple of months. We're going to go over charts, we're going to go over data, we're going to go over numbers, we're going to go over a lot of their Q1 numbers that they just reported and they beat expectations. So all of this data that I am using to predict Tesla stock into the 900s again. I mean, it was in the 900s just as early as February. So we're going to go back there, and I really predict that if the economy kind of revamps and everything starts opening up and the stock market itself does continue to rise, if all those factors are in play, I predict Tesla will break $1,000 by Battery Investor Day, which is sometime in May. So that is my prediction. Let's go over the numbers. Here we go. So this is Tesla's closing as of last week after hours. It closed at $751.70. So of note, Tesla has never gone down into the red, even after this whole CV illness 19 situation. Tesla has never gone into the red. I mean, in fact, they are 80% positive year to date. If you count a 1 year, a full 12-month period, they are actually 175% up on the full 12-month period. In a 3-month period, they are actually up 47.68%. And that's just incredible because consider all the other stocks taking hits like 60%, 70%, some stocks up to 80% hit. So Tesla's kind of holding strong at just 47% in the positives in a 3-month period. So the next event is Tesla's Q1 quarterly call, and that is when they're going to announce their profits, their revenue that they made in Q1. And of course, Q1 is the quarter where this whole illness 19 situation happened, is the quarter where they had to shut down their factories in California, in New York, and I believe in Nevada they also did have to shut down. And also obviously in Shanghai, in their China factory, they shut down for I believe 2 weeks. So Q1 is in the quarter they had all these shutdowns, just kind of like the rest of the world. So it is going to be interesting what their numbers are going to be reported. But I mean, we kind of had a little hint about their numbers because they did release their automotive sales for Q1 just a couple of weeks ago. So they beat expectations. They delivered 88,400 vehicles in Q1 of 2020. And that is up from 62,975 from Q1 of 2019. And that is a 28.7% increase quarter over quarter. So, I mean, even with this whole illness 19 situation, even with all the shutdowns, in all of their factories, essentially, they were still able to beat Q1 from 2019. So that just shows you how strong, how resilient they are, and the demand for their vehicles. This next chart shows you basically Q1 numbers for passenger cars. So essentially these are the whole category of passenger cars, essentially sedans really. So the top seller is the Toyota Camry, no surprise there. Second top is Toyota again, Toyota Corolla, no surprise there. So Tesla Model 3 takes the number 6 position. But you'll notice, Tesla Model 3 has a starting price of roughly really $39,000. That is not the same category as all these other vehicles. All these vehicles have a starting point roughly in the roughly in the 20,000 range. So this is not obviously comparing apples to apples. So I have $1.8 billion. So this is what I have adjusted revenue because the Tesla Model 3 does sell for roughly $39,000 starting price for the standard range. So 39,900, let's just say 40,000. That multiplied by 44,500 vehicles, that gives you roughly $1.8 billion adjusted revenue. Comparing that to the Toyota Camry, the cheapest Toyota Camry sells for roughly $25,420. So the adjusted revenue is roughly $1.9 billion. So for adjusted revenue, you'll see that the Model 3 is nearly at the top there. It would be taking the number 2 position if you adjust it for the revenue that the Model 3 actually brings in. So let's break it down into their actual categories. So the Model 3 actually performs in the small to mid-size luxury car, and if you bring it into that category, taking out all the Corollas and Accords and Civics, putting in the category that it belongs to, you'll see that it blows the competition away. Q1 sales, 2020 Q1 sales of the Model 3, 44,500. The next runner-up is BMW 3 Series at 10,613. So how about in the EV space, just the electrical vehicle space, remove all the gas engines and just put Tesla in the EV space. Obviously, they dominate that space. They are the number 1 player in that space. So this chart shows you the Model 3. It is in orange, and the graph just shows you, Model 3 is the number 1 seller throughout the whole time it's been out. Q3 of 2018, Q4 2018, 2019, all the quarters of 2019, and Q1 of 2020, it is the dominant seller, Tesla Model 3. Now, if you take away all of Tesla, you'll actually see that this segment is decreasing because nobody else is able to perform and produce like Tesla is. So now if we take out all the Tesla vehicles, you're left with essentially the other players, the Chevy Bolt, the Nissan Leaf, the Audi e-tron, Honda Clarity. So those are roughly the top performers if you take out Tesla, and you'll see the numbers are declining. Q4 of 2018 was the highest, and now it's going down in 2019, and then in 2020 Q1 it is going further down, and that is possibly due to the illness 19 situation, but in general the other manufacturers, legacy manufacturers, have not taken EVs seriously, and they are not going to survive if they don't start taking EVs seriously. I made a video about GM and Ford and how they are possibly going to go bankrupt. I'll link that video in the description below. Check out that video. Basically, I go through the numbers, the financial numbers of Tesla, and comparing that to Ford and GM, and you'll see just how much trouble Ford and GM are financially. So check out that video. Let me know what you think of that video. All right, so the next category that Tesla is poaching is one of the biggest categories is the crossover SUV. SUVs are super popular not only in the United States but pretty much all over the world. It is one of the biggest categories, and rising is the crossover SUV. So currently Q1 of 2020, the Toyota RAV4 is holding king. They have 97,631 sales for Q1. Next one is the Chevy Equinox, and then the Honda CR-V. So Tesla has just started into this space. They just released, are delivering their Model Y, which is their crossover SUV. They are actually 6 months ahead of schedule. Originally, the Model Y was not supposed to be delivered until, I believe, late summer or early fall of 2020, and it is March, and they started delivering in March of 2020, basically a full 6 months early. From prototype to production, it took roughly 1 year. And they have been making their deliveries even with the whole illness 19 situation, because Tesla vehicles have internet connection. They are able to, their owners are able to unlock their vehicle with their app. So when they sign for their vehicle, they do everything online. They're able to take deliveries, personless deliveries. So their whole illness 19 situation did not have that much impact. There's no dealership. Basically, you get the sale, and you have access to your vehicle through the app, and you can open your car and drive it away. Anything that you need to sign, you could just sign it and just leave it at the office. And that's how they've been delivering their Model Ys through this whole illness 19 situation. So this Model Y release, this whole push into this segment, is not a surprise. It should not be a surprise because this was already talked about back in 2016 when Elon Musk released his master plan. So here's their master plan. Basically, the second line there is to expand the electrical vehicle product line to all major segments. And like I said earlier, major segment of vehicles in general is the crossover SUV. It's the most popular, one of the most popular vehicles out there. And so obviously Tesla is going to get into this segment. Now, how about the luxury, higher end, larger luxury vehicles? Again, Tesla is king there. In Q1 of 2020, the Model S sold 4,600. The next runner up is the Mercedes S-Class at 2,366. So the next major segment that Tesla is getting into, just like they're talking about in their master plan, going into major segments. The next major segment is the pickup truck. The pickup truck is absolutely the biggest seller of any vehicle, any vehicle, automobile, period. F-150 has been king for years and years. That has been the number one seller, 186,561 just in Q1 of 2020. Next runner up is the Chevy Silverado at 143,000. So that's over $200,000 in just two vehicles in just one quarter, 2020, one quarter. So that is the Tesla market that they are going to get into. That is the market segment that they're going to get into, obviously with their Cybertruck. So the current price at 730-ish, that is accounting for everything that I just talked about. The price in there has accounted for all that. For their deliveries, how good they're doing in their Q1 numbers that they have yet to release as far as their revenue goes. That's going to be released on their quarterly call at the end of this month. So those numbers kind of have already been crunched, and people have predicted what the numbers are. Obviously, they're going to be good. Obviously, they're going to be better than last quarter. Not last quarter, but last year, first quarter, 2019. It's going to be better because they sold roughly 25,000 more vehicles. So it's no surprise these numbers are kind of already calculated, and that is in their stock price. So why I predict their stock price is going to go over 800. Well, number one is analysts have already pushed their numbers. The biggest one is Goldman Sachs. Goldman Sachs just released that they are now bullish on Tesla. They have a price point at $864 per share. So that is big news because Goldman Sachs throughout the whole history of Tesla has never been bullish on Tesla. All their analysts in the past have said Tesla is not worth more than a few $100s, and some analysts have gone to say that Tesla would be bankrupt. So this is a huge shift, a huge turning over of the leaf for Tesla because Goldman Sachs is the biggest and basically the number one investment bank out there. And if Goldman Sachs is saying Tesla is worth at least $864, that is huge news. And what's going to happen is other analysts are going to pile in. That's what happens. One analyst says this, the stock kind of goes up, then all the other analysts kind of jump on the bandwagon and say, oh yeah, we believe in Tesla as well. So that's what's going to happen, and that's going to cause more people to believe in Tesla, and that's going to cause the share price to even go higher. So it's going to go higher into at least the 800s for the next few weeks, I believe, as long as the economy is still roughly okay, as long as the stock market is okay. So the other thing is Tesla's Shanghai factory. Shanghai factory was closed for 2 weeks during the whole illness 19 situation. They are now back open and producing cars. In fact, they are producing roughly 3,000 cars per week, even with all these situations happening with the whole illness 19. So the other thing is their profit margin for made in China Model 3. So obviously made in China Model 3 are cheaper. It is cheaper labor in China. Everything is cheaper. Manufacturing is cheaper. So their profit margin is going to be better. They're charging roughly 42,900 for their Model 3s in China. That is actually higher than the price of the Model 3 in the US. It's roughly 39,000 in the US for the standard range. So their profit margin is reported to be at least 40% for their Model 3s made in China. And in fact, as they are producing more Model 3s, they are producing it more efficiently, and that is also going to bring the cost down, and therefore their profit margins up. So here you go. Here is a report. Tesla's gross margin for made in China Model 3 could increase to 40% or even higher. And here is a tweet from Ray for Tesla. So gross margins for made in China Model 3 is as high as 35% versus 20% for US made Model 3s. So in the past, they used to make the Model 3s in California and then ship them to China for sales. And obviously that takes into their profit margins, that eats into their profit margins. So now they're producing them in China with China labor and China parts. So like I said, everything is cheaper, and that is bumping up their profit margin. So like all this, like again, I said, it is in their stock price. That's why the stock price is currently $730-ish, because the whole Goldman Sachs situation, the whole China 3 numbers, the whole Q1 numbers, that is already in their price. The thing that's going to bump up their price to at least $900, if not $1,000 or over, is their battery investor day. I mean, there's so much news and so much buzz for the last year about what they're going to talk about, why they acquired High Bar Systems and Maxwell Technologies, what they are doing with their batteries. I think it's pretty obvious that they're going to manufacture their own batteries. Before, Tesla didn't actually manufacture the batteries. Their batteries were made in their factories, but their batteries were actually either Panasonic or LG Chem batteries. But just like Tesla has done with pretty much everything else, they are vertically integrating themselves. They are controlling their whole destiny. They are manufacturing their own batteries, their own drivetrains, their own software. So everything is kind of done in-house, and they're going to bring the final component, or one of the most important components, is the battery, right? The battery they're going to start making themselves. That's what I think we're going to hear on Battery Investor Day in May. But the biggest thing is I predict they're going to explain how they're going to get capacity, how they're going to ramp up capacity, because that is really the limiting factor, as they cannot produce enough batteries to make cars. That is the really limiting factor. The materials for the cars you could get anywhere. Anybody can make a car, but making the battery, having enough cells for the batteries, that is the bottleneck. If they solve that, you are going to see Tesla stock skyrocket. I guarantee you. If they have a clear and believable and clear plan to explain how they are going to be able to produce enough batteries for their vehicles and ramp up their vehicle numbers, they are going to break $1,000, and pretty much the sky is the limit if they are able to do that. Anyways, let me know your thoughts. Let me know if you agree. Let me know if you disagree. Let's have a conversation about it. Put some comments in the comment box below. Check out my other videos. If you like what I'm doing, please give a thumbs up. It really helps out the channel, and it's free for you. Come on, give a thumbs up, man. All right, catch you in the next one. Peace.